Hello everyone, welcome back to our channel. This is Vaibhav Bansal. Today we are going to resume our transfer pricing chapter. Till yesterday we have completed the point number 6, the other method. All the most appropriate method list that the government has given to us. We have completed all the methods of computing the transfer price, of computing the ALP, arm's length price. Now we are moving ahead with the range concept. What it says, by applying these type of method, by applying any of the method, by applying the most appropriate method, if you get more than one price, if you get more than one ALP, more than one arm's length price, then how will you get the range, or how will you get the exact arm's length price, that your arm's length price at which you have transacted with your associated enterprises is within that range or not. So this is why the concept of range concept is given. But there is a catch. Like, if there are six or more entries that has come by applying these methods, the above six method, if there is a more than six entries have been came, then only the range concept is applicable. Otherwise, you have to switch to the arithmetical mean concept. Is this point clear? See what it says. In the case where more than one price is determined by the most appropriate method, the arm's length in relation to such transactions shall be computed in the prescribed manner, which is as follows. Rule number 10 CA prescribe that rule. What is that rule? The rule is applicable where the most appropriate method results more than one price. When the by applying the most appropriate method, you get more than one price, then only you will apply what? The range concept or the arithmetical mean concept. So what is the range concept? This is the important point that you need to cover. The range concept apply in a case where six or more entries, that is a comparable transactions, are given. When six or more entries or six or more transactions are given, the prices are given, then only six or more prices, the arm's length price, by applying the method above, you get the six or more entries, then only the range concept is applicable. Otherwise you will move to the arithmetical mean concept, where the less than six entries are given, means the range concept is not applicable. Then in every other cases the arithmetical mean approach will apply. Okay, now how will we compute the range concept? See, first identify the price of comparable transaction of a current year, last year, and the last to last year. See, we have to take the data of 3 years, the current year, and the last year, and the preceding last year. Okay, these are the three data. If all these three data are not available, then what will you do? You will take all that data that is available. You will take all the data that is available. If all the three years data is available, then you will take all the 3 years. If it is only available for the 2 years, then you will take for the 2 years. Is this point clear? Now first take all the prices that has been given. Now secondly, compute the weighted average of such prices. Compute the weighted average of such prices. Okay, that will be easy. What is a PLI, profit level indicator? See, by calculating all the prices, you will get operating cost, operating profit, or operating revenue. You will get all these three things. If your OC, profit level indicator, is OC by OR or OC by OP, whatever it is. Okay, so what will you do? All sum up, suppose it is OP by OC by OP. Okay, so sum of all OCs and sum of all OPs, then whatever the sum is, just divide it, multiply by 100, you will get what? The weighted average price. Weighted average, you will get the weighted average price. Okay, is this point clear? Now arrange such result in the ascending order. Whatever the price you get, arrange that in the ascending order. Then identify the 35th percentile. Suppose we get what? 10 entries. Here we get 6 or more. Suppose we get 10 entries. So 10 multiplied by 35% is equal to 3.5. We will get the 3.5, or 10 multiplied by 65% is equal to 6.5. So these are the numbers we get. So we will get the identify the 35th percentile is means 10 multiplied by 35%. Identify the 65th percentile means 10 multiplied by 65%. Okay, the 3.5 and the 6.5. Now how will we compute the arm's length range? So it says construct the arm's length range. If the number is coming as a whole, like 3, 4, 2, 8, 9, 10, If these are the numbers, the whole numbers are there, then take the average of the current data, like in our case 3.5. So take the average of 3 and 4. Take the average of what? 3 and 4. The current, that is the 3, and the next one, that is the 4. Okay, you have, if there is a if there is a whole number, if there is a whole number, like 3 is the whole number. If 3 is the whole number, then you have to take the average of 3 and 4. That will be your arm's length price. The average of 3 and 4 is the arm's length price. Okay, then take the average of the current data set and the next data set number. If the number is coming in the fraction number, that is our, in our case is 3.5 or 4.5, then take the data of the next number. Like if it comes to 3.5, then take the data which is on the fourth number. Don't take 4, which is on the number which is written on the fourth number according to the ascending order list. There will be a 10 types of number na? There will be 10 numbers. You will take 1, 2, 3, 4. Whatever the value here it is written, you will take that. Is this point clear? Now, the whether price actually shown by the assessee is within the arm's length range or outside the arm's length range. Next point is what? After constructing a arm's length range, when you will construct a arm's length range, then you will compare yourself. You will compare whether the assessee's price at which he is transacted with his associated enterprises is within the arm's length range that we have computed just above. If it is within that range, then it is okay. You have done your transaction at the arm's length price. No other further adjustments will be needed. But if it is outside the range, then the further adjustments will be required. Okay, the range concept. Now it is very important to understand these two lines. This is very important. Just listen to it very carefully. The range concept is not applicable to the PSM method and the other method. If you have computed in your examinations through the PSM method or the any other method which has been prescribed by the board or by the ICI. Suppose ICI says you have to compute on this method. Okay, then you have computed on that method, but but what you need to take care of, the range concept is not applicable on the PSM and the other method. Whether the entries are 6 or more doesn't matter. Range concept will not apply on these two types of methods. Now, earlier we have said we have to take the data of the 3 years, like current year, first year, and the second year. We have to take the data of the 3 years. Yeah, but what it says for the for the cup method, data of current year need to be considered. For the cup method, the data of the current year needs to be considered, not the whole 3 years. Only the current year data is to be considered. That's why usually in your examinations, cup method is given. Usually in your examinations, cup method is given where you do not need to apply the range concept. Whereas the data of the data of the all rest method means apart from cup, apart from PSM, apart from other method. What it says? Apart from cup, apart from PSM, apart from other method. What it left? CPM, RPM, and then T and MM. These three methods are left. For these three methods, we have to take the 3 years data, current year data plus last 2 years data. Is this point clear? So why didn't you take PSM and the other method? As because it is said that apart from the cup method, all the other rest methods will be considered for the 3 years. But listen to me very carefully. For the PSM and the other method, range concept is also not applicable. If the range concept is not applicable, then what is the need of taking all these three data? These three data are from the range concept only, na? So what it says? It says if otherwise than the cup method, all the rest data will be for the 3 years. But for PSM and the other method, the range concept is also not applicable, so we will not take that method. Okay, so only method which is left you can write as well for CPM, RPM, and the TNMM. Only for these three methods we will take the 3 years data if given in your question. Is this point clear? Now, okay, we have completed the range concept. Now we are moving upon to the arithmetical mean approach. What is it? Arithmetical mean approach. Here with the name, what the name suggests, you have to calculate some mean. That's it. This is the whole concept. If the range concept is not applicable, that is the case where the data set consists of 6 entries. Or there may be case like the PSM, or like the other method also the range concept is not applicable. The arm's length price shall be the arithmetical mean, that is the average of all the value given. So you just take the simple average of all the value given, you will get your answer, provided that there is some exception to it. Provided that means whatever we have said just above, we are providing certain exemptions or certain exceptions to that point. Provided that if the variation between the arithmetical mean and the actual transaction, whatever we have computed in the arithmetical mean approach, whatever is the arm's length price, just we will compare it with our assessee's transaction, whether the assessee has conducted that transaction, that particular transaction within the arm's length price with his associated enterprises or not. After considering it, we notice that there is a variation. We said the arm's length price must be this, but there is some variation, and the assessee's transaction to with his associated enterprises is something different. So we will take a range of it. What is the range? In the above range concept, we have computed the range with this to this. If this is the range, then okay. But here, when we have computed the arithmetical mean, we will not have any kind of such range. We will get an exact figure. What is the average figure is the exact figure that you will get. If this is the range, this is the price, then it is only considered as a arm's length price. Otherwise, it will not be considered as the arm's length price. Is this point clear? This is the basic point. Now, what it says? It says if you are computing the arithmetical mean, if you are computing through the arithmetical mean, then just take the simple averages of all your values, just take the simple values and just compare it with what, just compare it with the actual transaction. If there is a variation, if there is something variation, then we will check whether that variation exceed 3% or not. If it exceed 3%, then only, if it exceed 3%, then only we will say it is not at arm's length price, and we will compute, the AO will compute your arm's length price. If that range, if that average is within the 3% of the variations of the actual transaction price, if it is within the 3% of your actual transaction price, then only it will be considered as the arm's length price. The transaction has occurred on the arm's length price. I hope it is very much clear to you all. If the variation between the arithmetical mean and the actual price, as shown by the assessee, does not exceed 3%, if it does not exceed 3%, the actual transaction price, in such case, the actual transaction price shall be deemed to be the arm's length price. Then the actual transaction price shall be the arm's length price. Means no adjustment will be required. But this is the case for a normal individual, normal company. But if you are a wholesaler trader, if you are a wholesaler trader, you are selling something in a wholesale market. If you are a wholesale trader, then this the range of 3% will become only for the 1%. It is there written. In case for the wholesale trading, it is only 1%. The tolerable limit by the government is only 1% in case of a wholesale trading business. I hope it is very much clear to you all. If any of you have any doubt, then you can comment me in the description, and you can comment me in the comment section. I will definitely reply you as soon as possible, or you can ask me in my Telegram channel or Telegram group. I will give you the answers to your query. Now, there is some circumstances in which ALP can be computed by AO. What may be the circumstances? When the AO will compute, AO will discard your computation of ALP, whatever the ALP that you have computed, AO will discard that. In what are the circumstances? What are those circumstances in which AO will say that I will compute your arm's length price, your arm's length price is weak to me, is not suitable to me. So what are those circumstances? Say, suppose I have not followed the most appropriate method. I have not followed the most appropriate method. Then the AO will say it is not as per the most appropriate method. As per your transaction, I can see and I can vouch it is the most appropriate method is a cup method, the comparable uncontrolled price method. But you have applied the CPM, the cost plus method. It is a wrong method. So when you have not applied the most appropriate method, then the AO will come and say, okay, I will check, I will compute the ALP. Secondly, AO will say, in the above part of this section of this chapter, you will see we have to maintain some information in the document under section 92D. If that section is not complied with, if the assessee has not kept the information in the document which is need to be maintained and the kept under the section 92D, if you have not maintained that, then the AO will have the reason to believe that you have something to hide, then you have something to hide. That's why AO will compute the arm's length price. These are the two methods. These are the two reasons. Let me first complete this. If on the basis of the material available to him, he is of the opinion that he is who he is, he is the AO. Who is the AO? The price has not been determined as per the prescribed method, like the CPM's cup method, the difference between them. Any information or the document have not been kept and maintained as per section 92D. Whatever the documents and the information has given under section 92D, you have not complied with, you have not kept those information of the document with you for that prescribed period of time that has been mentioned under section 92D. Then third point, any information or the data used in the computation of ALP is not reliable or correct, or the AO has the something reason to believe or has something to doubt that the data that you have given to the AO or for computation of the ALP is not correct, it is not reliable. Like there are certain kinds of, in the practical world, there are certain kinds of software that are used for the ALP calculation. Like one is the Proves, Capline, then third is the ASTP. These are the three main sources of the data that you get for the ALP calculation. From these are the three databases from where you will get the data to fetch for computation of the ALP. Okay, now you have taken the data from the ASTP. You have taken the data from the ASTP, but the department, the AO, has the software Proves, and he has just fetched the data from the Proves, and when comparing the data with the Proves and the ASTP that you have provided, he sees he noticed that the data in the ASTP is not reliable. The Proves is showing something else, and the ASTP is showing something else. The data is different. Then in that particular case, the AO can say your ALP calculation is not reliable to me. It is not correct to me. I will compute as per my software. I will compute as per Proves. Is this point clear? Or the case apart may be we may compute as per the Proves. The company the AO will say no. It will be done as per the kept line. So maybe it is just the AO software what he gets the data from and what is the correct data. This is all that you need to understand. Okay, this is a ABC point. Now D. If the associate has failed to furnish the required information or document within the specified time under a notice issued under section 90D. Under section 92D, there is certain timeline given. If you have not submitted your document, then the AO will give you some a particular time like of 10 days. AO will give time for 10 days to submit all your informations or the documents. If you have not submitted your information or document within those 10 days, then it will and the AO will have the reason to believe that what AO is in his opinion that the ALP is vague, is fraud to me. So he will compute the ALP in this point. Okay. Now the assessing officer may determine the arm's length price subject to an opportunity which will be given to the AO or to the assessee through a show cause notice. As I already told you, the opportunity will be given as per, according to the show cause notice only. Then show the cause. Why will we not compute the ALP in this case? In your case, why don't we calculate the ALP in your case? So you have to give the cost to the AO. Is this point clear? I hope section number 92C, subsection 3 is all clear to you. Now, coming on to the subsection 4. What it says, when an arm's length is determined by the A, above under subsection 3, we said the arm's length price will be computed by AO in these circumstances. Okay, now what it says, when the arm's length price is determined by the AO under the above circumstances, the AO may compute the total income of the assessee having regard to other such arm's length price. Because if the AO has computed the arm's length price, then definitely your income is going to change. Definitely your income going to change. So AO may also compute your revised total income. What will be your total income after adjustment of the arm's length price? Okay, he will compute, but he will not take care of two things. He will not take care of two things while recomputing your total income. What are these two things? He will not give any deduction for section 10A or under section chapter 6A shall be allowed. No deduction shall be allowed under chapter 6A and of section 10AA in respect of the enhanced amount of income which is in effect of the ALP. Okay, for the enhanced amount of income, whatever the income is enhanced by the ALP, recomputation of the ALP, from that enhanced income, the increased income, the AO will not give the deductions of the chapter 6A and section 10AA. Is this point clear? Now, considering the ALP as determined by, for payer, payee cannot claim refund on such excess TDS. What it says, suppose, let me say this is India, this is India. We are the payer. Okay, we have transacted with the associated enterprises, say in US. Say in what? US. Okay, is this point clear? He is a pay. Our Indian payer, our company case is come under the scrutiny and the AO determined the arm's length price. After determining the arm's length price, it says our AO, the Indian AO says that your income is increased. Your income is increased due to the arm's length price, the enhanced arm's length price. What it says, see the enhanced amount of income, it increased the arm's length price. That's why my income is also enhanced. The government says that. So you have to give tax on this. Yes, definitely. Then the USA pay cannot say this. If that pay also paying tax to India, then he cannot say this, that our payer have given the more tax to you, have given the more tax to you. So now you give to us the credit, the excess TDS credit. The excess TDS credit should not be given to that pay, should not be given to that pay. This is the point. If under the computation of the assessment, under the assessment proceeding, if the AO has increased your arm's length price, the enhanced computation of your arm's length price, then the payee of the USA will not come and say that pay the a refund, just give me the refund of the excess TDS that he have deducted to us. This will not going to be the, this is not going to happen in this such case. Is this point clear? I hope it is very much clear to you all. Okay, now coming on to the section number 92CA. 92CA is that reference to a TPO. Till now, what we are saying? Till now, we were saying assessing officer, AO, AO, AO. Till now, what we are saying? It's AO. But you know, AO is not as much suitable with the transfer pricing matters. They are more comfortable with the income tax, PGBP, house property, salary. They are just more or less comfortable with those kind of sections only. They are not comfortable with these kind of big sections of the transfer pricing, that the company international transactions. They are not much they are not much used to of those transactions. So for those transactions, there is a specific authority, there is a specific kind of a assessing officer which is known as a transfer pricing officer. So in such case where the AO, in the assessment procedures you get under the chapter of the assessment procedures, you get to know that the AO can, when the AO can open your assessment, the scrutiny assessment, regular assessment, 147, 148 notices, all these assessment, the reassessment kind of things. In that case, the AO have selected your, suppose by applying the assessment provision chapter, the section 142, 143, 147, 148, 144, whatever the case is. Okay, the AO have selected your case. And after selecting your case, he has come to the notice it has come to the notice of to the assessing officer that there is a case of a transfer pricing as well, but he is not comfortable with that. So he can make a reference. He can make a reference to whom? He can make a reference to the transfer pricing officer. Listen to me very carefully. He can make a reference to the transfer pricing officer. In short, we will call it as a TPO, transfer pricing officer, TPO. It is a practical life example. This is called the TPO, transfer pricing officer. All the transfer pricing proceedings are done under the TPO only in the practical life. Okay, so all these things can be done through the TPO. After just in our Hindi batch, I have just completed all these provisions in just one or 1.5 pages in the notebook. So I request you to make this in your notebook as well. We will complete it in this 2 pages. We will complete it in 2 pages. It will be a very easy point if you complete it with these notes. Let me just remove the highlighters first, then we will understand. Okay. I hope you have already made these notes in your notebook by your own handwriting. If you haven't, then please message me. I will share these notes as well in the Telegram channel or my Telegram group. Okay, but please message me if you haven't. But I will definitely request you all to make this by your own handwriting. Okay, now listen to it very carefully. What it says: reference to the transfer pricing officer, that is in section number 92CA. First point is that when the AO, and here is the TPO, there is some international transaction or the specified domestic transaction that we have covered, like the international transaction and the specified domestic transactions are covered under the scope of the transfer pricing that we have covered within the first class itself. So the international AO or the international specified domestic transaction both can be transferred to the TPO for the computation of the ALP. But if he is going to the TPO, if he is shifting his responsibility to the TPO, then he have to take the prior approval. He have to take what? The prior approval from his senior. He will take the prior approval from his senior. So before delegating his work to the TPO, he have to take the prior approval from his senior. Who is his senior? His senior is CIT, the Commissioner of Income Tax, and the PCIT means the Principal Commissioner of Income Tax. Either of these two, he can take what? He can take approval. Is this point clear? Is this point clear? Yeah. Whatever it is, we will understand after going for downwards. We will come again on this point what it said. Okay. As of now, you can ignore this point. Now, for the TPO and for the assessor. See, now after giving the case to the TPO, now TPO comes into the picture. Now, TPO will send a notice to the assessee and say, notice will be served to the assessee and say, I am requiring some evidences, some supporting evidences within this specified date. That specified date will be given in the notice itself. That specified date must be given in the notice itself. The notice must be served from furnished reliable supporting evidence on the date specified in that notice. Whatever the time period is given by the TPO to the assessee, within that time period only, the TPO, the assessee will give all the supportive evidence, the reliable supportive evidence to the TPO. Now, during the course of the proceeding, any other international transaction come to the notice of the TPO. What it says? Any other international transaction. Oh my God, what it says? Listen to it very carefully. It says proceeding any other international transaction, but we have given is international transaction and specified domestic transaction. The AO have referred both the things, international transactions and the specified domestic transaction. But what he is talking about, he is talking about just international transaction, not the specified domestic transaction. So during the course of the proceedings, if any other international transactions come to the notice of the TPO, if any other international transaction, not the specified domestic transaction, you can write here, it is not the specified domestic transaction, it is just the international transaction. So during the course of proceedings, any other any other international transactions come to the notice of the TPO which have not been referred, which have not been referred by the AO, which has not been referred by the AO, then what? The AO shall determine the ALP of those any other method also, for those any other transactions as well, as he will deem that it is as good as the AO has referred to him. He will deem that the TPO shall determine the ALP of such international or such other international transaction as if he has been referred to him by the AO, as if he will deem that as if it has been referred to him by the AO. And the 2B point, what is it? Not reported under section 92E TP report or form 3CEP. What it says, the AO, that assessee have to file a form or form number 3CEB for reporting of all the international transactions. Suppose if he comes to his notice or that transaction is either not reported by the are not reported under the form 3CB, which is to be furnished by a chartered accountant. Okay, if that form is not furnished or have furnished or missed something, some international transaction is not showing under this form, then the AO and that form and that international transaction comes to the notice of the TPO. Then the TPO shall determine the ALP of such other international transaction as if it has been referred to him by the AO. Is this point clear? I hope it is very much clear to you all. If during the processing the TPO detect SDT, what I've said, it is for the international transaction. If it detects any specified domestic transaction, then he is not empowered to determine the ALP of the same under this under this section. I hope it is very much clear to you all. It is much clear now. Coming on to the next part, we get all the informations. AO have determined all the international transactions, the ALP of the international transaction, whatever he come to, whatever the transaction come to his notice. Now, AO, after considering all the documents, evidences, shall pass an order determining the ALP. Order determine the ALP. What is the time limit? Time limit is 60 days from the date on which time limit of for completion of the assessment or reassessment is completing. What it says, if the AO, now coming here, if the AO's time limit for completion of the assessment or the reassessment is completing on 31st March 2025. Suppose the completion date is 31st March 2025. Then the TPO must give his order before 60 days, before the 60 days from this date. From this date, before 60 days, he must give his order to the AO, so that after considering your order, after considering your ALP, he must recompute all the total income of the assessee, or giving some such deductions as may be prescribed by the government, or so that he can give the assessee the remand order, or he can give him demand order, or maybe if the refund comes, then he will give the refund. But in the transfer pricing cases, remember one thing: no refund can come. Is this one clear? No. However, now we are saying something for the 60 days. However, where assessment proceeding are stayed by any court, like the assessment proceedings are on the hold by the any order of the court, or where exchange of information has been made from the foreign tax authority under the section under DTAA. Just remember, we have completed it, like the exchange of information, the objectives of objective of DTAA. We have completed the objectives of DTAA under chapter double taxation relief. The first point we have said, the objectives of the double taxation relief is one point is to for the exchange of information for prevention of the tax avoidance or the tax evasion. We have done this point now. So where the exchange of information have been made from foreign tax authority under section under the DTAA under section 1990A, then the time available to the TPO by making an order after excluding the time for which the assessment proceeding was stayed by the court, or time taken for the receipt of the information as the case may be, is less than 60 days. So whenever we get the information, whenever the TPO get the information now, after considering those informations, if it is like AO will not today also, we get the information today. Now today also we will give the order, we will pass our order, then AO will not AO will not be having 60 days. AO will not be having 60 days. He will be left with some less days from the 60 days to complete his assessment. If that is the case, then the such remaining period shall be extended to 60 days, not extra, not extra 60 days, to 60 days. Suppose now the AO is left with 57 days only. AO is left with 57 days only for completion of the assessment. Okay, now we will increase his time to 60 days. Then we will give his 3 more days so that his time period will become 60 days. I hope it is very much clear to you all. Is this point clear? Two. What the word is two, not till 60 days. Okay, extending to 60 days only. Total of 60 days will be given to you. Now, in such case, the time limit left for AO after the extended time period to TPO, it shall be extended to 60 days. What I said, I just said. See, AO, I just explained this in this point. Okay, AO shall pass his assessment order to the order of the TPO in conformity to the order of the TPO. What it says, whatever the TPO order is, whatever the TPO order is, the AO is binding on that order. He cannot challenge the order of the TPO. He is binding. The assessee can challenge. Yes, the assessee can challenge, but the AO cannot challenge that. The order of the TPO. The order of the TPO is in conformity. The order of the assessing officer's order for the assessment or assessment procedure is it should be in the conformity. The binding on the AO in accordance with the order of the TPO. Then the TPO in case his order having mistakes apparent from record, if the TPO finds that his order having some mistakes which is apparent from record, there is some calculation mistake, there is some errors or the mistakes which is apparent from record, which is directly visible to everyone. If there is any kind of such record, so he may amend his order, but subject to the provisions of section 154 for the rectification. Whatever the time limit for rectification is 4 years, so he can do all these rectification within that the prescribed period under section 90 190 sorry 154. Now what are the powers of TPO? What else the TPO has the power? TPO can issue summon. TPO can require your bank statement. TPO can also do a survey under section 133A. All these are the powers of the TPO. Is this point clear? I hope it is very much clear to you all. This is the whole 92 CA. I have completed this whole 92 CA in a very lucid and an easy manner. I hope it is very much clear to you all. You can easily read it and you will get to know that everything is covered in this chart of those 2 pages. Is this point clear? Now, for today, we are doing section 92 as well. Then safe harbor rule. With this safe harbor rules, we have whatever we have left, we will complete. We have left the definition of this meaning of the specified domestic transaction. We will do that as well. Okay, these two things we will complete. Mm, Let's set our target for today. If we will complete till here only, then it is also good to go. For the advanced pricing agreement, let's see whether we can complete it today or not. It is a much wider section. I just don't want to get into hurry and complete this section. Uh, so we will complete this as well. Transaction with NJ and the combined effect. These two sections will be completed by me today itself after completing the definition of after completing the definition of safe harbor rules and these transactions. Now, above where I have said in those cases AO will determine your ALP. I have said to kept information and documents under section 92D for a certain period of time. Is that clear? I have said if you have just remembered those points, see the information and document have not kept under section 92D. Okay, so these are things the assessee have failed to furnish the required information or document within the specified time under a notice is under section 92D. If these are the things, then what is the time? Just listen to it very carefully. Remove this 30 days or this 30 days, it is 10 days. It is now 10 days. Okay? No. See, A person entering into IT, international transaction, or the specified domestic transaction shall keep and maintain such information or document as may be prescribed. Prescribed information and document are not required. See, if anyone is entering into an international transaction or the specified domestic transaction, that he have to maintain certain kind of informations and the document that may be prescribed by the government of India. But there are certain criteria where all these information will not be required to be kept. What are the criteria? if your if your international transaction value, if your specified domestic transaction value does not exceed the aggregate amount of the international transaction at the specified domestic transaction does not exceed to 1 cr, then you are not required to prepare those informations and the documents. Is this point clear? I hope it is very much clear to you all. Then the prescribed documents and informations are need to be kept and maintained for the 8 years, from the end of the relevant assessment year. From the end of the relevant assessment year is from our for our date, it is 31st March 2025, where our assessment year is completing. From here we will give it 8 years as well, then it will come to 31st March 2033. Till here we have to kept all our informations and document for the assessment year for 24-25. Is this point also clear to you all? Yes. Now, what it says, the A or the CIT appeals may require any person who have entered into AIT and or the ISDT to furnish any information or documents within the 10 days. Now, what I said, he may require the information. So, till what time? Till what time the AO will the assessee have to give that information or the documents? It will be given to till the 10 days. The time period is only 10 days. Is this point clear? I hope it is very much clear to you all. As I said earlier as well, the A will have the assessor will have the time limit of 10 days where he will give the all information or document required by the TP or the AO. Is this point clear? From the date of issue of such notice, the assessor can make an application for the extension, and it may be further by another 10 days. It will be further extended by further 10 days. Okay. Now, power of board to make safe harbors. Before it, let me complete the specified domestic transaction, because the safe harbor rules for the specified domestic transactions are only applicable for your examinations, but the safe harbor for the international transactions are also issued by the government of India, but it is not yet notified for your examinations. So it is not always covered for your examination. It is just for the international transaction. It never covers in your for your examination. The ICI in your examination only covers for the specified domestic transaction. So first we will understand what is the specified domestic transaction. Let's come to the specified domestic transaction. Yes, the specified domestic transaction means that it is an exhaustive definition. You cannot add anything by your choice. Whatever is written in these 3 points, these are the only thing which will be considered as a specified domestic transaction and nothing else. What it says, there is an inter-unit transfer of goods or services, means the transfer of goods or services by the assessee from his eligible business. Eligible businesses 80IA to 80 RRB or section 10AA. These are his eligible businesses. If he is transferring from some goods from his eligible business to a normal business, or vice versa, the normal business is transferring to the eligible businesses, or the eligible business is transferring to the normal businesses. So if there is any inter-unit transfer, and the consideration for such transfer does not match with the FMB, if you are transferring on inter-unit, and the cost and the price of such transaction is not matching with the fair market value, like the arm's length price. If it is not matching with the arm's length price, then the such goods or services will be considered as a specified domestic transaction. That transaction, for that particular transaction, it will be considered as a specified domestic transactions, and all the provisions of the transfer pricing will be applicable to those transactions. Now, any transaction between assessees. Now here what is the inter-unit transfer? Now, any transaction, what it says, any transaction between the assessee. Who is the assessee? Eligible business, 80IA to 80 RRB or 10AA. and any other person. Transaction between assessee and any other person who is carrying normal businesses which produces profit more than ordinary profit to the assessee, or ordinary profit to the assessee. Assessee is who? The eligible business. If see, for the eligible businesses under section 80 IA to 80 RRB or the 10 EE, you will get the 100% deduction of your profits. You will get the 100% deduction of your profit. These are the profit linked deductions. These are the profit linked deductions where you'll get 100% of the deduction. So if you have entered into any agreement or enter into any transaction between the assessee, the eligible businesses and the other person, where the profit, the maximum profit is shifted to that assessee who is carrying the eligible business, so that his whole profit will be get exempt. So if there is any transaction that produces the profit which is not ordinary, which is in access to the market, which is in access to the industry, if industry is earning around, suppose the industry is earning around 10% of the profit for that. Okay, if the industry is around 10% of the profit on that particular transaction, and in that particular transaction the particular assessee which is in case like 80 IA to 80 RRB earned around 20 or 25% of the profit, then it is not ordinary profit to the assessee. Then in that particular case, what will be understand that is it is a case of the transfer price, that the price is shifted to an assessee, the eligible business, because he can get the 100% of the deduction of his profits. I hope it is very much clear to you all. Any transaction between the assessee who exercise 115 BAA, 115 BAE, here the tax rates are very low, the 15%, 22%, these are the only tax rates. And other person carrying the normal rate, normal business, he is going to give tax at the rate of 25%, or maybe 30%, which produces profit more than the ordinary course of the business. Same analogy is taken here as well. For this point number 2, the same analogy is taken for the third as well. Now, provided that, what is provided? I said provided means there is certain exceptions or the exemptions on whatever we have just read above. Provided that the aggregate value of the aforesaid transaction during the previous year must exceed 20 CR. If the particular transaction, if the aggregate of those transactions, 1, 2, 3, or aggregate of those transactions, all these three transactions must be clubbed, and if after clubbing all these three transactions, if during the previous year the transaction is not more than 20 cr, if not more than 20 cr, then the provisions of transfer pricing, the provisions of SDT will not be become applicable. It will only be applicable when the transaction value exceeds 20 cr. I hope it is very much clear to you all. We have completed this. Now completed when we have completed the um, definition of the specified domestic transaction, now we are coming to their safe harbor rules. What it says, see, safe harbor is just like a presumptive taxation. Under the PGBP, you have completed the presumptive taxation. Same the case here is what you have to just compute. You have to just compute the arm's length price based on certain criteria. Based on certain criteria, that the government is saying that show that minimum price. Show that minimum price, whatever we are saying, this is the minimal price. Above that, you can take any price. But this is the minimum profit, or this is the minimum price that you have to show in your books of accounts. Is this point clear? This is the only case. These are the two cases only. It is just like a presumptive taxation under the PGBP. The determination of ALP by AO or TPO shall be subject to a safe harbor rules. Okay. Board may, for the purpose of subsection 1, like this, make some rule for the safe harbor. This is the whole explanation 9b. 9cb. Now there is some explanation. For the purpose of this session, safe harbor means circumstances in which the income tax authority shall accept the transfer pricing declared by the assessee. This is the case where the presumptive income as well. In the presumptive income as well, the income tax authority shall accept the accept the profit which is declared by the assessee. Here what is said, the income tax authority shall accept the transfer price declared by the assessee. So how we will compute the safe harbor? So safe harbor computation is very easy. Supply or transmission of the electricity. If our assessee is engaged in supplying or transmission of electricity to the government, so what the minimum price is, the tariff is determined or approved by the appropriate commission as per the Electricity Act 2003. Whatever the tariff is given by some authorities, the appropriate commission under which is established under the Electricity Act 2003, whatever the tariff rate they are deciding, you must give the according to that only. If you have transferred to your AE as well, then you have supplied some electricity to the AE, so it must be transferred on that tariff only. This is said. Okay. Then purchase of milk of or milk products by cooperative societies from members. You have said purchase of milk or milk products by cooperative society from members. When the cooperative society is procuring what the milk or the milk products from its members, then what it says, the price is determined at a rate on the basis of milk quantity of the milk. Basis of the quantity of the milk, these are the 2 points which is not much relevant. It is not at all very much important. This section is also not very much important for your examinations. You can just read it. It will be determined on the basis of the quantity of the milk. That's okay. No, these are the points which you have already know. Nothing new in that. Section 1911, when we have completed the business combination chapter, I have also said these things to here. Whatever the cases, section 92, 92CA, these provisions, the safe harbor rules and the determination of ALP will also be applicable on under section 911, where we have said the reasonable attributable. So whatever the reasonable attributable is will be determined as per these rules only. It is said just these things. This is important, not important. You can just read it. Nothing is important in this table, in this box. No, this will be done tomorrow. This will be done tomorrow. Tomorrow. Now coming to the transactions with NJA. What it says, NJA. The government said we will notify some of the jurisdictional areas where to get information, from where there is no exchange of information, from where we feel that there is some transfer pricing is happening and that particular country is not providing us the data. So in that cases we will provide that country into under the we will notify that country into the NJA notified jurisdictional area. Sir, whether is there any notified jurisdiction area? So earlier there was a one like Cyprus, but as of now there is no one in the NJA. And NJA topic is also asked in May 24 examination, so it is not as much very much important for your examinations. So okay. So what it says, person located in the NGA shall include. Who is the person who is located in the NGA? A person who is a resident of the NGA. Who is resident of the NGA? The person not being an individual which is established in the NGA, or a permanent establishment of the person not falling under clause A or clause B. Any person who is not falling under clause A or clause B, if he is having the permanent establishment in the NJ, then he will be considered as a person located in the NJ. And all the provisions which the government is going to notify here will be applicable to all persons who is located in the NJ. So what are the CG? May notify any country as NJ which do not have effective information exchange mechanism with India. Okay, so as of now, there is no one notified under this list. All parties, both the parties or all the parties will be deemed to be the associated enterprises. If there is a suppose there is a Cyprus, and there is the India. There are two entities which are transacting with each other, and these are not AE. These are not AE, but it is a NJ. Suppose it is a NJ notified by the government of India, then this party will also become the AE of this Indian entity. Is this point clear? So all the parties will be deemed to be the associated enterprises, and all the transaction will be deemed to be the international transaction. And what we have said, that we have said all the provisions of transfer pricing shall apply, but here we are harsh, because these are the notified jurisdictional areas who have no effective exchange information mechanism. So the government does not want to be lenient on them. So the government is saying all the provisions of transfer pricing shall apply except the variance of 1 or 3. Like we have said, for the wholesale trading, the range concept is only for sorry, the arithmetical mean, the variation is only 1%, and for the arithmetical mean for any other case is it is 3% of the variation is acceptable. So the government is saying all the provisions of the transfer pricing shall apply except the provisions of the except the variance provision of 1% or 3%. It will not apply in that case. Now, payment to any person in NJ. If you are paying to any if you are paying to any company or the person in the NJ, that person is located in the NJ, that person is located in the NJ, then the TDS rate will be 30%. Leave over whatever you have read in the TDS chapter or the TCS chapter. We are saying that if you are transacting with the NJ, you have to deduct tax or the TDS at the rate of 30% in prior. Okay. Now, if the assessee receives any fund from the NJ, okay, the assessee have to offer explanation about the sources of fund. If you have received any fund from the NJ, then you have to give the assessee, the Indian assessee have to offer every kind of explanation about the sources of fund, from where the sources of from where the fund is received to you, what are the kind of activities the other AE is doing for you. All these things are will be asked each and everything in detail, because it is a notified jurisdictional area from where we do not have a effective exchange information, so that the government can get the information of that company as well, in the which is located in the NJ. The government is asking you all the sources of information, whether it is a black money, whether it is a white money, we have to apply the PMLA or not. So the government is asking everything to you. If the assessee does not give satisfactory explanation, then the fund will be taxable in the hands of the assessee. If the assessee provided the explanation, but it is not satisfactory for the government of India, then the fund that the assessee is received will be taxable as the income in the hands of the assessee. I hope it is very much clear to you all. Now this is the penalties list. If you go through it once, it is very much easy. So see, if the assessee, we will see this part tomorrow, because for that we have to read the constituent entity. We are just reading this part today. We are just reading this part today. What it says, in relation to international transaction or the specified domestic transaction, you have to keep and maintain the prescribed documents up to the 8 years, but you do not have to maintain those provisions and those information or the document if your aggregate international transaction does not exceed 1 year. This is the case. If you fail to maintain such documents information, then you have to pay the penalty of 2% of value of such transaction. What is the every aggregate value of the transaction which for which you have not maintained and kept the information of the documents? You will pay the 2% as a penalty. Now, I have said the AO or the TPO may ask about the information and the documents, and you have to submit that within the 10 days only. And now the further period can be extended to 30 days if failed to furnish such information. If it failed to furnish such information, the penalty is 2% of such transaction. Or if you furnish any incorrect information as well, if you fails to furnish or furnish incorrect information, in both the cases the penalty is 2% of value of such transaction. Here is 30 days. I just marked it 10 days if I am not wrong. Extended can be of 30 days. This is 10 days only. Just remove whatever you have written here. It is only the 30 days. The extension will be provided for the 30 days, not for the 10 days. The required is 10 days only. When the AO or the TPO will send the notice to serve the information to all the documents, then it will be of the 10 days. If you want to kept it further extended, then it can be extended for the further 30 days. I hope it is very much clear. No. obtain or furnish a report from chartered accountant 1 month prior to the due date of ROI, that I said form 3CEB, where you have to report everything, where you have to report every transaction, the most appropriate method, what is the price, and what is the price as calculated by you, and what is the price is shown in the books of accounts. Everything is going to shown to you. Now, if that report is not furnished, then on the assessee, not on the chartered accountant, on the assessee, the penalty of rupees 1 lakh will be applicable. And if the CA is failed, if the CA fails to report any transaction in such 2% report, if the assessees fail to report any such transaction, um, any such in such report, just cut this 2%, then the 2% of the value of such transaction will be the penalty. Is this point clear? All the there are things, 2% penalty in all the cases except this case. In this case, it is a 1 lakh rupees penalty, the clear penalty. Now, all the three things, the rollback provisions, the APA secondary adjustment, and the interest limitation of interest, thin capitalization part. This is the thin capitalization, the limitation of interest, and the very small point, the CBC and the master file. We will complete it by tomorrow. Everything will be completed by tomorrow. So this is all for the session. If you like this session, please do subscribe, share, and comment below the session in the comments section. I will see and reply all your doubts and the comments as well. Thank you so much for watching. Let's meet tomorrow at the same time, and we will complete each and everything. Or we will complete the transfer pricing chapter by tomorrow. Thank you so much.